Welcome to TheExchanger. I'm your host, Ben, and I just went on vacation in the heat of earnings season, and holy Toledo, AMD just bombed their earnings report, and not the kind of bomb you like to see, not like the kind of bombs Tesla's dropping. You're talking about the bomb you dropped on your 8th grade math final exam. In AMD, sorry, not NVIDIA, AMD gets a D- for this earnings report. I mean, it was just abysmal. It was abysmal. So before we get into AMD's earnings report, let me just explain what this means about retail investors' ability to understand the stock market. Because after this abysmal earnings report dropped, the stock traded upwards. They missed on Wall Street expectations, their revenues dropped dramatically, and the stock went up. This means that you shouldn't even try to really understand the stock market in the short term, because it's going to do whatever the hell it wants. So now let's have a look at this abysmal earnings report. Revenue down 18% year over year from $6.55 billion to $5.359 billion. Flat revenue growth quarter over quarter. Gross profit down 19% year over year. Operating income down 104% year over year, but this is kind of a flawed statistic. Operating margins down 8 percentage points, and net income down 94% year over year. Now, the net income and the operating income are a little bit skewed. If you look at the non-GAAP, you'll see that they are down 46% and 44% respectively. So that's a little bit better. But all this being said, how were AMD's results compared to Wall Street estimates? Here the story gets even worse. While AMD didn't miss on Q2 revenue, they provided a $100 million miss on Q3 guidance. Analysts were expecting $5.82 billion, and AMD gave guidance of $5.7 billion. Now, compared to the company's market cap of $175 billion, it's a relatively insignificant amount. So why is the stock up? Honestly, I've got no fucking clue. In the segment that I thought AMD could provide strong growth in, data center revenue, they completely shit the bed. Completely. It was atrocious. Data center revenue was down 11% year over year, up only 2% sequentially, and according to the earnings call, that's because their 4th gen processors didn't sell as well as their 3rd gen processors. Like I said, only up 2% sequentially. That is rough. If we continue reading into this earnings report, it says AMD Instinct, their new AI accelerated computing product, is sampling to leading HPC and cloud and AI customers. Let's just chat about this real quick. If you look at who's buying AMD and NVIDIA's products, it becomes very clear who has the upper hand in this industry, and that's NVIDIA. Let's have a look at their revenue numbers compared to AMD's. Data center revenue growing at a staggering 14% year over year and 18% sequentially. And it is not going to slow down, which is why they gave guidance of $11 billion in Q2 revenue, up from $7.192 billion in Q1. This kind of growth is unprecedented from a company as large as NVIDIA, but not in the recent era because we have Tesla. It's not all bad news for AMD though, because there is such an extreme shortage of AI compute that it's not a winner-takes-all market. NVIDIA simply cannot fulfill all the demand themselves, leaving room for 2 juggernauts. That being said, I wasn't completely taken off guard when Lisa Su went on with Jim Cramer and said that AMD is expecting 50+% growth in data center revenue in the back half when compared with the first half of 2023. However, I was slightly taken off guard because it is widely assumed, and I think AMD has even said, that they're not going to be producing the MI300X in mass quantities until the 4th quarter. And that's partially why I'm talking about this stock. Data center revenue was down, they provided bad-ish guidance, and yet they are poised for a huge growth opportunity in the not-too-distant future in a market that is almost impossible for them to screw up. But I wouldn't put it past them, because they have a rushed product assembled by a team that was scrambled together in a hurry, and also the product was rushed to production, which means that a lot could go wrong. However, I'd like to reiterate that there is space for 2 juggernauts in this industry, so even though NVIDIA has the superior product, there are a lot of companies that only require the amount of compute that AMD is offering. So if they can't get their hands on NVIDIA's crown jewels, they'll be happy to take AMDs. To wrap it up, demand for data processing compute is off the shizzies. So while there may be room for two to thrive in this space, I'm not going to be betting on AMD. NVIDIA swallows them whole in every financial and product-related metric that exists. So I think I'm just going to stick to them. That's it for today's video. As always, if you learned something new or gained a new insight, please subscribe. Actually, you know what? Just thanks for being subscribed, because I already know you're subscribed. So, without further ado, TheExchanger, as always, signing off. Peace!